What's going on, guys? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, coming to you for our week look back podcast, episode number 35 here in this gorgeous July 24th, joined as always by the executive producer of the show, the purveyor of the show, and the director publisher of the world's greatest website, oilandgas360.com, Stuart Turley. How you doing this morning, my man?
I'm doing fantastic. It's a beautiful day in the neighborhood.
It is really good. I am excited. We have a great show for you guys lined up. We're going to whip around the oil patch, pretty much cover all of the crazy earnings that happen. We're going to check in with the levels and the DOE dashboard that we have up on the Oil and Gas 360 website, which I'm excited to show you. Check in with inventory levels. And then the 360 official, non-official funds still suspended, but we will cover some things looking to. But first, guys, I need to talk to you about my friends at Adamantine Energy and what they're doing for social risk in the energy space. Guys, social risk is not just community opposition to development projects. It's everything from the success, from the divest from fossil fuels movement, to all this investor engagement that's going around all your ESG programs, to all these individual states setting these really crazy, ambitious decarbonization agendas. It seems like it's everywhere, and to be quite honest with you, it's moving fast and multiplying like zombies, and that's why your company needs a strategic partner that to help prepare you and assess for all of these shareholder institutional pressures on your peer companies, aspirational and regulatory changes that are driving energy policy and the perception of where you and your headquarters operate, all this anti-gas climate divest into this local community organization that's impacting how you can roll your operations. We're going to talk about a Supreme Court ruling that the fallout of it could affect 25% of Oklahoma, 25% based on one Supreme ruling. It's why you need to partner with Adamantine Energy, their leading consultancy, helping oil and gas companies prepare for all of this social. They're led by Tisha Schuler, who's the former CEO of the Colorado Oil and Gas Association, and she also is the host of is one of the best podcast that covers these issues, the Energy Kings podcast. Guys, if you're not listening to her, she just is next week. She's releasing it in an interview with Alan Armstrong, who's the CEO of Williams Companies. And I actually produced, full disclosure, I edit her podcast. I've listened to it. It's wild. Great interview. I'm excited for you guys to hear it. Check that out. Energy Thinks podcast. You should also read her Both Things Are True weekly newsletter, which you can find at energythinks.com. Subscribe to all things Adamantine Energy. We loved him there. Stu, it was a wild interview. It's a big hitter she's got over there. It's unbelievable, the stack of lineup. I can't officially release the schedule, but it's been sent to me. Woo-hoo-hoo! They pull in some big ones. I highly recommend checking that out. I'd also recommend subscribing to this show because there's no best way to stay updated on your energy finance stuff. Follow the 360 Digital Closing Bell, iTunes, Spotify, YouTube for our live show every single day, which is really awesome. We go live on YouTube every single day at 2 p.m. Mountain Standard Time for about 10-15 minutes covering what happened. In the overall equity market, specifically when it comes to the energy markets, guys, you should also follow everything Oil and Gas 360 on Twitter, LinkedIn, Facebook. We're live. We post all the time. Connect with me and Stu. You can find everything at the world's greatest website, www.oilandgas360.com. What's also there is the Energy 360 podcast, which is the one that Stu runs, and this is an awesome podcast, guys. Basically, it's the place for energy thought leadership. We have over 50 episodes that we have done, interviewing everybody from energy technology leadership to ESG management, and then all the way to operational people. Like specifically, we're going to talk about an oxy well that they used a lot of profit on, and they hopefully use one of the companies that we talked to. And so it's a great one. Stu, what do you have rolling out here next week? It's a big week coming up.
Oh, we do. We have Brad McPherson from Enverus. He is the director in Oklahoma, and he and I chatted about Oklahoma spacing, which is a new Enverus product, which is just unbelievable. Then we have another one from Enverus coming up, and then we also have TGS. That's coming out as well too.
That's a great interview. That was a great interview with two great people.
Oh, you bet. And then we have another one from Dan Genovese, our consultant, director of consulting services. That one's coming out as well too. So we got a stacked week.
Yeah, no, we have a big week coming next week, and then sooner or later it's going to be conference time. We're about to be, wildly busy coming up here, so it's going to be a great show, guys. I think that's all for clerical work. Just please connect with the show. We really appreciate the support. when we look at what happened this week, we've got a couple stories here. Stu's got something. Really, my main takeaway was service company earnings. I think that was kind of the big bucket that happened. We saw Halliburton, Baker Hughes, and Schlumberger this morning announce earnings, and honestly, you get mixed signals from both. Halliburton released on Monday. Really not terrible. They reported actually a profit of about 5 cents per share, which is very interesting. Now they didn't necessarily revenues were 3.2 billion, just a little bit below the expectations of 3.35 billion, but they beat. The key is their 5 cent per share beat the consensus of they were expected to lose about 12 cents a share. So not bad for Halliburton, not great though. Remember, they're mostly a U.S. based corporation, so to see them necessarily down wasn't necessarily a surprise per se. I think it was more a surprise that we're able to maybe turn a profit. Now, if you, between me and you, I don't like earnings per share necessarily, but when you want to talk about it's a number that analysts care about because it does. It talks about there is some validity to it. I'm not as big into it as other people, but when you see them beat, when you see them beat expectations on some of those big numbers, revenue, earnings per share, all that stuff, well, that's going to move. Now, they're not necessarily trading per se any higher. If we go kind of pull up the chart here on Halliburton.
Don't forget about the non-GAAP measures that's being used right now, and that's EBITDA before COVID.
EBITDA, yeah, don't get me. Non-GAAP cash flow is one of my favorite oxymorons I've ever heard. I mean, Halliburton's trading for, market's open right now. We're actually recording this 7:30 a.m. for anyone who's listening on a Friday, July 24th. I mean, Halliburton's trading up. They're up from earnings. So, I mean, there's clearly the consensus, beating the consensus is really nice over there. We saw Baker Hughes drop on Wednesday, which was expected quarterly loss, and it was a little more than was actually expected. They actually had 20 cents per share earnings last week. When we look at revenue, where's their revenue numbers? 4.74 billion for the quarter ending. Pretty. I mean, you think about how big these companies are. You're doing about 4 billion in revenue over a quarter, and that's down. That's that's over $1 billion compared to last year. So I mean, there are people still moving on here. When we go look at the charts for Baker Hughes, it's not been great. It has not. It's not quite been good since earnings. It saw an initial pop, fell back down, and it rallied late yesterday, which is we saw oilfield services up about 6% yesterday. So all these companies, I think, are rallying off decent news. What's going to be very interesting here is when we look at what happened with Schlumberger, because they announced this morning, Stu, not great. Not great. Worldwide revenue of 5.4 billion decreased by 28% from the quarter before. International revenue, which was up last quarter, decreased by 4.1 billion, decreased by 19%. Oof. North American revenue, 1.2 billion, decreased by 48%. GAAP loss per share, $2.52. So this is generally, this is what you want to carry about. Cash flow from operations, only 803 million, and free cash flow is about 465 million. Not good for Halliburton. Not what we expected, Stu.
No, we expected some. You and I had talked about the lowering of the U.S. profitability, but I did not expect that.
No, I didn't expect international revenue to drop 19%, specifically. I think it's, yeah, I mean, you look at you think about it, they do 1.1 billion in North American revenue. They do about 4.1 billion. And yeah, it just, so when you see an international number drop that much for a company whose 75% of their revenue is made overseas. That's why Schlumberger's, they're not headquartered in Houston. They're, you know what I mean? Their headquarters over in France, I think. What is it? I don't know. Aren't they French? Are they a little French company? They probably got some sweet offices somewhere in the Riviera. Oh, I guarantee the CEO's got something sweet. But well-deserved. It's a big company. He's a $5 billion. You talk about, they do about $20 billion a year. It's a pretty decent. Yeah, they're doing a lot of revenue. So my point being is this. We got mixed signals on on earnings, specifically when it comes to the service companies. I'll be interested to see. I mean, let's take a look right now. I would wager to bet SLB's getting pounded right now, and mixed signals. You see what I mean? And this is why you don't really want to trade earnings, because they're pretty neutral right now. I mean, they opened at 1962, took a nosedive to the 50-day moving average at 1990, and now we've sort of moved its way back up, currently trading about 1930. So who knows? Who really knows what's happening? I don't like those numbers just from a structural standpoint when you're trying to look at kind of what the health of the industry is. Clearly, North Americans continue to pull back, but see the international pull back a little bit, because that's where Schlumberger comes in. Hi, yikes, Stu. That was a not a tough one to read, but it caught me off guard, and it kind of it doesn't necessarily slap it. I mean, this kind of goes against the thesis we've been running that if any money should either be flowing into ESG or offshore. Yikes, I don't know.
Yeah, offshore has had some good news.
I'm talking international. Excuse me, international.
Oh, okay. International offshore has had some good news, and we'll cover that in the international section. But COVID has been able to be curtailed in the North Sea and everything else. So there has been good news coming out of the offshore. Sorry.
No. And I mean, there's good news coming out everywhere. I mean, I've got this tweet that I've got here. This 5-well pad. I shared this with you. This 5-well pad from Oxy. You want to hear some production numbers?
That was the best I've ever heard.
What's up?
That is one of the best I've ever heard.
It's unbelievable. So I'll just read you guys this press release. So Occidental Petroleum scored a new company high IP24 in Lake County, New Mexico. In New Mexico. I mean, this is, it's end of the Permian. Located in the Red Tank Field. I'm not even going to read the name of the well. It's long. Was completed 51 stages, 25 million barrels of proppant. Somebody is still selling it, buying proppant, and clearly it's Oxy. And they did a 10,000-foot lateral and about works out to about 2,400 pounds per foot, which is pretty decent. 24-hour test. The well flowed 6,960 barrel of oils equivalent, 80% oil cut, or about 640 barrels of oil equivalent per 1,000 feet of lateral from a Bone Springs 24 64-inch choke. We don't even get all this junk. I don't even know what half this stuff means. In the first 3 months, Stu, though, the well flowed 328,550 barrels of oil equivalent, or an IP90 of about 365 barrels of oil equivalent at an 82% oil cut. So some good news coming out for Oxy. They've got themselves a doozy. That 5-well pad is about 28,000 barrels of oil equivalent per day for the whole 5-well pad. That's flowing, baby. That's flowing.
I'd like to see some more detail on the parent-child on that and the reserves. It'd be kind of interesting to see that. They just gave us an overall view, but didn't break it out.
Yeah, and that's the other side of the equation. I think that was what you saw. If I'll link this tweet in the show notes. Oh, that was what half the comments said. Well, let's see the reserves. Because you can spin this. I mean, regardless, it's a big number. The real question is we're looking at 10,000-foot lateral, 25 million pounds of proppant, 51 stages. You know how much money they spent? That costs cash up front. That's not a cheap well to drill. And even at 28,000 barrels a day, I'm no mathematician here, but 20, especially at an 80%. So what is it? 80% oil cut. So we'll multiply that by 0.8. It's about 22,000 times price of oil. Let's go look at our Plains All-American. I haven't done this in a while. All-American crude pricing. There we go. Crude oil bulletins. Let's find it. What are we buying crude oil for today? Okay. Blah, 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 blah. 2020. Happen when you do stuff live. This is historical. So this is where you're buying in June. Yeah, let's see here. These are historical. I want the live ones. All right, whatever. $40.
Yeah, the one I'm looking at is 4107. But
cool. 4107. That's 900,000 a day. So You depend on what your expenses are. I don't know. They clearly know the numbers better than I do. I doubt they're making this much this much per day on that 5-well pad. And I bet you that number was I bet you it was over 50 million for this 5-well pad.
Let me throw this at you. Let me throw this at you from a profitability standpoint. And just as Ring Energy as an example, they have their well costs down because they are using standard wells and not having to do that crazy long laterals. They've got their cost down. I believe it's only, I'd have to look at the number. I don't want to just throw it out there, but their percentage of profitability is significantly different. And if I'm going to look as an investor, I want percentage of profitability.
Well, I think you bring up a good point. There's, the vertical wells are so much cheaper to drill. And there's if you're gonna do a new well, yeah, it's an interesting concept. I mean, you can't, assuming these numbers check out, and I'll take Oxy at face value. I mean, we don't necessarily know what the relationship is, like you mentioned, but I mean, it's that 5-well pad's probably flowing 28,000 a day. I mean, I don't think they're just making this up. That's not how it works. So I guess the question is, how much are they actually making any money off that? Because in 2 years, you drill that well 3 years ago, you don't make money on that for a year and a half, because you had the financing and it was just all about getting it done.
You are not going to go get capital for those kind of wells.
Exactly. So it's and that's the funny part. It's Oxy. Where are they getting the cash from? That's the other thing. What they've got cash. I got buddies who just got laid off by them. I 2 of them. Where they got the cash? That's a lot of. That's a lot of salaries you got to add up for a 5-well pad that's doing 28,000 barrels of oil there. 22.
Yeah, the other one is, let's take the Bone Springs versus the San Andreas. I mean, you got to take a look at those different areas that they're getting.
Called TGS.
Hey, gotta call them.
Gotta call them. I just thought that was wild, and there's so many different angles you can look at this. I'm looking at the map they've got spun up. Wild. So, Oxy has got some good stuff. You've got a finance story for us.
Yeah, Bank of Oklahoma has been a long time friend to oil and gas. And with a longtime friend, they had an interesting comment on their financial announcements. Let me just read this one little paragraph here. Energy loan balances decreased 138 million to 4 billion, or 16% of total loans, is the current commodity price environment.
Oof.
So here is one of the major oil and gas loaning facilities and financial arms. Approximately 62% committed production loans are secured by property producing oil. The remaining 38% is secured by properties primarily producing natural gas. Unfunded energy loan commitments were at 2.5 billion. This is a significant article for availability of cash for companies. Thought it was really good. I'd hate to be a financial arm investing in that kind of capital.
Yeah, because as you mentioned,
when you've got to hold reserves or product or wells as holdings, that's kind of tough because it's a changing number right now.
Yeah, no, it's a lot. There's a lot going on there that would make it spicy. So, I mean, cash is drying up from all sources. So it's unless this price environment changes or people figure out how to go back. I mean, I don't know about you. So if you heard, I don't know, are people hiring? Is they're starting to now? I mean, we've had $40 oil for 2 weeks now. Is there any chatter on your end about, okay, now we can maybe, because I think $40, you do it right, you can make money.
They're not going to be drilling again until Q4, possibly even next year. And the reason is because of the amount of supply that is still there. Our poor refineries are stuck in the middle because demand curve has not picked up to what it needs. You got
Yeah.
stuffed. Our supply is still not there for people to be able to go drill again. So no, the employment is not there.
Yeah. Well, that
Um,
stinks. But and even the capital's not going to be there. And
well, Michael, real quick on capital, you and I have been talking about this, and we've seen it almost on every single capital um, eh, firm out there right now is saying they are tying it to ESG. And Dan is seeing it on the consulting services side. You and I are seeing it.
yeah.
Capital, we're all fighting over the same capital. And if you don't have an ESG plan and you don't know what you're doing and you're not articulating that ESG out there, you ain't going to get capital. No ESG, no plan, no capital. Dan's got some ESG consulting he's got going on over there. So we'll put him in the show notes. It's bad. I mean, it's good if you know that you've got ESG plans.
No, and you're absolutely right. The way things are tied nowadays is unbelievable. No, it's something that you guys have been on the Intercom consulting side for a while now, and I'm just reading tea leaves over here. I got my 9 screens. I just look at the data and try to make some halfway decent decision. I just wanted to run an update on that U.S. Supreme Court fallout. McGirt versus Oklahoma. As all we remember, about 2 weeks ago, the U.S. Supreme Court decided 5-4 that in favor of McGirt versus Oklahoma. And it was an issue that dealt directly with criminal enforcement, but it also encompassed this larger view of tribal land rights. This case really focused on whether this Jim C. McGirt, make sure I get his name right, should have been tried in federal court because he's a Native American, and the crime in question was that he committed the crime on a historical Creek reservation. The ruling found that the Creek reservation was not officially terminated at Oklahoma State, and the decision could affect up to 25% of Oklahoma's recent oil and gas wells, and 60% of the refinery capacity. All lies within historical tribal territory, according to state data. Woof. So you want to talk? We talk about I'm an economics guy myself. We talk about negative externalities. This is one.
Oh, it's
Because
a
I
mess.
doubt they even had this in mind when they
Oh,
thought about it.
the fallout from this is just going to be horrible. Now, I'm going to throw a little bit of blame on the Congress. They've had the opportunity to fix this for years, and the Supreme Court now said you better fix it. And that's troubling because in the tribal relationship in Oklahoma, they are important. The tribes are important people. They are a sovereign nation, and I agree with everything on that. Now, the stinky part is it should have been taken care of years ago. So,
Yeah, exactly. And I mean, I think one of the biggest fallouts is mineral rights owners. If you own minerals on tribal land, on this now new qualified tribal land, well, what happens?
we don't know
We don't
that
know
now.
yet. And that's where I got a quote from the Petroleum Alliance of Oklahoma. They're like, we're moving forward with the state of Oklahoma, the tribes of Oklahoma's congressional delegation, to ensure that our members continue to have stable, predictable, and regulatory and tax environment consistent with their interests. It's critical for the continued investment in Oklahoma, and that the state maintain primacy with the regulations to oil and gas operations issues, and that issues of title with regard to real property remain unaffected. And that's the key.
That's right.
Who owns these titles? Because you've dealt with this, right?
Oh yeah. I've got land up there, and it was part of a Cherokee land grant that was sold. The original owner was a Cherokee land grant, and I've got the title that it was sold. So that's different
Than
than.
this, yes, that's different than this. But who.
I had an interview with Brad McPherson over at
Mm,
Inver, and they have a new product called Oklahoma spacing or open the space.
yeah, some sort of well spacing thing.
Uh, it's phenomenal. They've got great data, Inveris means data. Welcome to data. Don't make a decision without data or Inveris. Now, that being said, they are on it. So,
No, it's a great interview. I'd highly recommend. I'm checking that out. It's just another example of unintended consequences. It'll be interesting to see how it plays out. I don't think it's going to necessarily come out to. I don't think you're going to be stripping oil and gas minerals from landowners, but you never know.
who knows what's going on anymore, man?
Are we still having even an election? Not sidebar. Like I have heard nothing about. Is there even an election still going to happen? Do we know? Complete sidebar. This is something that's been bothering me for like 2 weeks.
Don't get me started on politics.
I won't. But like legit, are we show? Is everyone going to show up to? How are they going to do this? I just started thinking about that. Like you're going to tell we're going to send people to the polls?
Well, I'm going to say my opinion is not the opinion of Intercom. My opinion is voter fraud will be the deciding factor.
Oh, I feel you. Yeah, I don't know. I just was thinking about the other day. I was like, are we even still having an election? Like, what's going on? No one's talking about that, which is wild. So we'll get back on track, guys. You didn't sign up for this to get our opinion on what's happening in November. So what do you have? Oh, I guess this is the other thing I wanted to talk about. Clearly another thing that happened, early, lately, Chevron buying Noble. That's kind of the big issue that happened. I think we've done enough covering of it. My question is, what does this mean for M&A deals going forward? One of the things that Michael Wirth said on the call, this is sort of funny. He's got the CEO, former CEO. He just got bought out, so he doesn't care. He's got a fat wallet. He doesn't care. He's got a fat wallet. But on the call, he goes, "Yeah, not really a great asset to be selling it. Not a great price environment to be selling assets into." Talk about a slap in the face to the shareholders.
That was a gut punch about 4 inches low.
But to the shareholders, because if you looked, yes, there's a $20 million buyout clause for the CEO. I don't remember his name, but I read the buyout clause, a change of owner. What do they call it? Like a change of ownership clause? It was like $19 million.
You want to cover the one stuff that I had out there on the purchase on that and what it really means internationally, or just save that part to the international part?
Yeah, we'll save that on the international side because I think that means something all in itself. I mostly want to say, okay, so this is the deal we've seen. Chevron, one of the biggest players, has actually said it's not a great environment to be selling into. Now, that probably means it's a good environment to be buying, because there's good deals happening. So the real question is, are we going to see good deals happen, and what does this M&A structure look like? We quizzed Dittmer on it a lot, and I don't know if he, clearly he's not going to go out and he's not going to just say something without he's going to back it up. Right. I'm wondering, do you have anything on your mind? There's been a lot of floated, I've seen some Diamondback. Some people floating around some stuff with Diamondback doing some either being acquired by some of these super majors or acquiring somebody to try to move themselves up into that Oxy category.
Well, I'll tell you what, Fang is really got some interesting stuff going on. But Andrew over at Inveris said that I'm going to throw the number out because I need to go check the number. But let's say we're $1 billion down in M&A activity for Q1. Over Q4 of last year's down. I believe that this one Chevron's going to kind of like bust the dam open for more M&A activity. So you're going to see a lot more of that popping up.
Yeah, it'd be interesting when the other super majors, no doubt they're already talking with potential acquisitions right now. If you don't think that's happening right now, it's just how the game works. It's what all these, that's what you do as a C-suiter. It's all pretty much all you talk about.
One of the biggest articles that I had a publisher's note on was an article, I can pull it up, but it revolved around the fact that the super majors were doing a lot of this to put out of business a lot of the smaller players, and they're going to just suck them right on up. So this super major play has been there for a while.
Yeah, it'll be interesting. Who's Exxon going to buy? I think that's really the question. Who's it going to be? And I don't know. All right, what do you have on the international news desk for us?
Okay, got a couple stories here. International's gonna go kind of interesting here. And speaking of political, um, and you take a look at the Cold War between Russia and China, but the U.S. I sat through a lot of that,
Mhm.
and the Cold War sucked. I mean, you had to build up, and we finally just economically ran over them. Guess what's starting again? A Cold War with China. And so this Cold War with China has oil implications. It has people are going to think that they're going to be able to go buy a microwave.
What are the oil implications specifically?
Specifically, China is now just put a order in with BP for a ton of natural gas. They've also been buying tons of oil from Iran outside of sanctions.
Ugh,
So,
there's
uh,
the kicker.
yeah, you start taking a look at the OPEC Plus and the OPEC. China is going to be bypassing that, and they're buying illegal oil wherever they can. They are going to be impacting the entire oil price structure
Hmm.
from a supply standpoint. Pretty crazy stuff in this new Cold War coming out. Politically, it's going to be awful. Oil wise, it's going to be a lower level, kind of like anyway, I don't want to even know how I'd say that, but it's kind of like uh, a mother-in-law you don't like. It's going to be underneath the bottom of it right there. Fortunately, I like my
You would
mother.
make a great politician. That's a great way to put it. Um, you got another story I'm looking at here.
Yes,
Specifically, it's a kind of a shoot off from the Chevron Noble.
yes. And speaking of Chevron Noble, this is an outstanding buy for Chevron for the natural gas play. I know that you know that I'm really big on natural gas. The Leviathan field,
Mhm.
Israel just had one of the largest plays in the Leviathan field with Noble come up in January, and it's right out there. What this is having a problem with is a full fold fight in the EU, Russia, Uzbekistan, all of these other areas, Turkey, are all going after international water rights, international law for these fields. Pipelines to Cyprus, Israel selling gas. It's a mess. Noble having the first ones coming out of the Leviathan field and the pipes coming out, the takeaway is almost done. Phenomenal buy by Chevron on this, and that's why I just want to bring it up in the international side of it. Is it's right smack dab, and years ago we talked about this in one of our earlier expert interviews. Is the Russian pipeline being shut off to all of Europe, and Putin was over there saying, "You will pay my price." Well, all of EU and now everybody else is now buying LNG from the US, buying LNG from everybody else. And Israel went out and put this one out. So a big mess, Chevron the winner.
No, it. There's so many different little angles in which Chevron comes out. I think on top here, this was a great acquisition for him, and I think you hit it best. So
I'm writing a long-term story trying to figure all this out, and I've got an article coming out on LNG for our oil and gas magazine for the oil and gas conference. So stick around. We're going to have some of that. And if you want an advertisement on the oil and gas 25th anniversary magazine, we
it's
are going to.
over. It's the deadline's passed.
I know somebody.
Okay, I know somebody, you know somebody. I just kidding. So yeah, maybe it's still open. I know the date is somewhat past. So what that means is get your orders in soon so that it can be hot off the presses.
That's right.
Anything else on the news desk internationally?
I'm wiped out. I,
Nice.
I I'm ready for the hall pass, dude.
I'm ready for it. Yeah, can it be 2:30 and we be off or some? I've actually got a little stuff to do. So I think let's go ahead and dive into the week, more to the oil levels and what happened in oil trading last week, guys. As always, the segment is sponsored by Sandstone Capital Group. These guys do insanely good research and provide all of the levels and the trading advice for their energy glimpse solution. Just check them out, sandstonecg.com, 949-561-1818. Tell them the podcast sent you. It's the only way we get credit. And really, when we look at the levels for the week on crude, I mean, it was bullish to begin with. I mean, we started the week, we saw 42 high. We've now since kind of fallen below 41, currently trading 40.98. So price structure, I mean, it looks, when you look at it from a week standpoint, price structure is bottom. But if you kind of zoom out to about 2 weeks, we've seen a drastic increase, and the structure still looks bullish. I think now is, to be honest with you, might be a good time to go long if you're interested in. We've kind of moved those levels up each week. Some of the big levels I'm looking at, we're going to, like I said, we moved the bottom up. We went ahead and dropped that 38.18 level that we've always liked, and we moved and we went ahead and resettled bottom 39.09. I don't even think we see that. I think we moved the bottom up to really probably 40.17, I think, is going to be our new bottom when we just kind of look at the price structure. At least when we look at the way I don't even think we'll get below the point of control, which is 40.64. But interesting to see how today's trading day goes. Really on the upside, though, I see 41.35 is a good level. 41.54 is a good number. Top right now will probably 42.44. Very interesting to see what happens. Will close today here at about 3-4 p.m., depending on what time zone you're in. Let me just see what happens this weekend, any news drops and what moves forward. We're going to now start seeing a lot of E&P earnings roll out, and that's what we're going to cover on Monday for the podcast is, we gave our sort of service company outlook, last week when we covered earnings. Now we're going to start seeing some heavy hitters on the E&P side and what that means for the U.S. shale business. So it'll be very interesting to see what happens, especially, and what all is going to happen is the sentiment's going to be around the price of oil. If these earnings are down, but price of oil continues to be bullish, people are still going to buy this. So, currently market's down heavy right now. NASDAQ down 2%. Woof. Probably some earnings came out we don't know about. We'll have to take a look into that.
Is S&P down too?
S&P's down a 0.5 percentage point. Dow Jones down a 0.5 percentage point. 12-month strip for crude oil's up. Natural gas down. It's just early in the trading session, though. We're only about 30-ish minutes into the session being open, specifically on the commodities and the equity side. So long day ahead of us as we truck forward. When we look at the new EIA numbers for the week, you got some decent stuff here. Cushing crude stocks came in just a little higher than last week, but still below their five-year moving average. Stocks came in at 536 million. Total U.S. stocks was about 4.8 million above what happened last week. 11.1 million barrels for U.S. field production, up 100,000 barrels. So some of those wells being turned back on, Stu. Some of those wells are being turned back on. Like you mentioned, it's not drilling. It's these, some of these new, those shut-in wells beginning to come back on. So 11.1 million barrels. Refinery utilization, 77.9 percentage points. Gas prices, on average, $2.19. If you're listening to us in California, you're not seeing that natural gas price. But all good stuff. Good.
I don't want to interrupt you, but I am. I'm sitting here looking at you read all this off of a new dashboard that you built.
Oh, yes. I did, yes.
I'm following along. This is going to be great for our listeners and anybody on Oil and Gas 360. You did a great job getting this out here.
Oh, I appreciate it. I appreciate that. I spent a lot of time working on these dashboards, and this is the first week that these dashboards are pretty much live, so I can use them for the podcast now. Basically what my plan is with each of these dashboards, we're going to be rolling them out sequentially here. Next week we'll have a rig data natural gas. I really want to be able to, when you want to know what happened with inventories, there's a bunch of data you want. You want total U.S. stocks. You want the change in the crude inventory levels from last week. You want the change in weekly production. You want weekly production. You want refinery utilization. And you want to know where these stocks are relative to their 5-year moving average. All of that's available on this single dashboard, including a historical production, U.S. domestic production graph, which is going to be great. We're going to have a natural gas inventories one, which is going to have all the numbers you want about natural gas inventories. We're going to have a rig count one where you can see all rig counts. It's going to be unbelievable. Then we're going to kind of work into moving over to the equity side and pulling some of these energy equities up. But I'm excited to launch these dashboards. I don't know when you're going to launch the page live yet, but we're ready to roll here.
It may be Monday, Tuesday, but I'll tell you what, I'm excited about the financial ones for services that you go out and pay $1,000 a month for. Our subscribers are going to have access to that for about $50 a month. So
Yeah, exactly. That's kind of the
fantastic.
cool part is it's going to be a low cost way to basically get really, really particular and highly granular and highly segmented, not customized, but formatted, easy to read financial and energy market data. And we're going to be rolling out so many. After the conference, they're going to be just coming in like hotcakes. We're going to kind of taking it a little slow moving up to the conference, but we'll have some rolled out specifically for it. It's going to be awesome. I'm so excited about this.
Nice job, Michael.
I mean, guys, the 360 official, as we kind of move into the last segment, 360 official, non-official, if I still suspended, we've been, to give you a little peek behind the, kind of a little, we always call this inside baseball. Stu and I are in charge of recording all of the pre-recorded interviews for the oil and gas conference that's coming up. Guys, we're so busy. We're running around like chickens with our head cut off. So the fun may be suspended a little bit. I've actually started building mine. I've taken some positions out and they're active right now, but I don't want to release them yet because I'm still building the other. I need to build the other half of it. So we're thinking about it. If you guys have suggestions or companies that you want to be in the portfolio, email me. I'm Tanner@intercominc.com. Tomcat's going to have a little section. Stu will have a little section, and we'll have the People's Fund. This is what we call the People's Fund. You want in? Let us know. We're all about taking any picks the People's Fund. The People's. It sounds very communist. It sounds like we're going to end up as the People's Republic of Oil and Gas 360.
Okay, don't get me started on politics. I'm about to get airsick.
I feel you. Well, good. Then we're going to let you stop getting airsick, and we're just going to go on. We're over 40 minutes here, so we're going to go and let you guys get back to work. Thank you for listening to us on the Oil and Gas 360 Network. This is the 360 Digital Closing Bell podcast, guys. Until next time, we'll see you for the digital ticker.